Dreaming of an early retirement has become a common aspiration for many individuals seeking a life of financial freedom and flexibility to do whatever you want, whenever you want. And while this journey to early retirement requires careful planning and smart investment choices, advancements in technology and investment strategies have made this dream more attainable than ever before. Now, one such approach gaining popularity among savvy investors, especially young ones, is putting your money to work in a low-cost, high-quality ETF like SCHD, or the Schwab US Dividend Equity ETF, and setting this up on autopilot. Now, in this video, we're going to explore what might be the simplest way of dividend growth investing and go over the step-by-step process of how it can be done by anyone. Now, we are going to go over all this and more right after you please drop a like in this video and subscribe if you like content like this. Now, by leveraging the benefits of automated investing, which mostly these days all of the common brokerages offer, you can set yourself up for success and gradually build a robust portfolio while enjoying the peace of mind that comes with a systematic approach. And by investing into SCHD on autopilot, you can automate your contributions, take advantage of the diverse holdings of the high-quality dividend-paying stocks within the fund, and benefit from the potential capital appreciation on top of that. But let's pause for a second and look at exactly what the SCHD ETF is, and then we're going to dig a little bit further into the strategy. So the SCHD ETF, also known as the Schwab US Dividend Equity ETF, is a popular ETF that aims to provide investors with exposure to high-quality US dividend-paying stocks. Now, this fund is managed by Charles Schwab Investment Management Group and seeks to track the performance of the Dow Jones US Dividend 100 Index. Now, this index is comprised of a basket of stocks that not only have a history of consistently paying dividends on time, but also has a track record of raising the dividends consistently. Now, SCHD uses a screening process to select the companies based on their dividend yield, their dividend growth rate, and earnings quality. And historically speaking, SCHD has been a great ETF for long-term investors. If you look at the capital appreciation over the past 10 or so years, the fund is up 176%, and with an only 0.06% expense ratio. The Schwab US Dividend Equity ETF allows you to hop on an awesome investment vehicle for almost free. Now, SCHD has a very diversified portfolio with a lot of very familiar high-quality holdings. Things like Broadcom, Pepsi, Merck, Cisco, Coca-Cola, the Home Depot, Texas Instrument, Pfizer, Chevron, and Amgen. What's also great about SCHD, and especially as the way it's been trading as of recently, the dividend yield has ballooned up to almost 4%. The trailing 12-month dividend yield is right around 3.68%, with around $2.64 paid out in the last 12 months per share of SCHD. But what's maybe even more important for an investor that wants to build out a long-term automated strategy, investing into an ETF like SCHD over the long term is definitely going to be the ETF's dividend growth rate. Now, a dividend growth rate is basically how fast a dividend grows year over year. And if you look right here, historically speaking, SCHD used to pay just around 81 cents per share throughout a whole year of dividends. Just a few years later, SCHD was already paying over $1 per share. And then just a few years after that, SCHD is already paying around $2.50 to $2.75 per share per year. Now, if we were to extrapolate and go off of the previous dividend raises, which of course, this is just an estimation, SCHD very simply could be paying around $7 or more by the year 2033. Now again, just a disclaimer, just because SCHD has raised their dividend pretty quickly in the past doesn't necessarily mean that they're going to continue to do so, but that's why it's just a future estimation. Next, let's go through the numbers and I'll show you exactly what a long-term automated strategy would look like for an investor that just invests $5 per day into an ETF like SCHD. So for an investor out there that starts with just $10,000 as their starting principal and adds $5 per day into buying more SCHD. Or if you want to put it this way, don't buy a daily coffee. Instead, invest $5 a day into SCHD, which would give you an $1,825 contribution per year. Now, with SCHD's initial dividend yield of 3.68%, an annual dividend increase of 10%, which keep in mind, SCHD's 10-year dividend growth rate is even higher, but we're going with 10%, which of course can possibly be lower or higher in the future. This is all just an estimation. So year number one, this investor would have $373 worth of annual dividends in a $10,000 portfolio of SCHD. Now, if this investor was just to spend $5 per day buying more SCHD on an automated program. Through the automated investing strategy that we talked about earlier, this investor after year number 2 would have $12,442 worth of SCHD and just under $500 per year in dividends. By year number 3, this investor would have over $15K worth of SCHD and $642 worth of annual dividends. By year number 5, this investor would already have over $20,000 and over $1,000 per year in annual dividends. Now, if we skip a few years, go down to year number 18, this investor would now have over $112,000 worth of SCHD and over $13,000 per year in annual dividends. And keep in mind, guys, this is just with a $10,000 starting budget. And of course, $5 per day towards SCHD with all the dividends reinvested. By year number 24, the investor would have over $275,000 worth of SCHD and over $49,000 worth of annual dividends. And all the way down at the bottom, this investor would have $890,000 worth of SCHD with over $241,000 per year in annual dividends. What's truly amazing and what the moral of the story is that if investors out there just consistently invest, even if it's just $5 per day in an automated investing strategy, over time, the power of compounding will kick in. And as the numbers get bigger, right around maybe year 15, 16, you can see the numbers consistently get larger and larger at a very, very fast rate. And although some investors out there might get a little bit discouraged thinking that it takes tens of thousands or even hundreds of thousands of dollars, invest it into something like SCHD or something comparable to really see their portfolio compound, it's just not necessarily the case. An investor that just spends $5 a day on an automated investing strategy can also achieve a massive amount of dividend income as long as they stick with their strategy and stay in the market long term. After all, didn't Warren Buffett say it best a while back when he said, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. A long-term automated investing strategy like this could be one of the best, most simple ways for investors to get wealthy if they're willing to keep at it and hold on long term. But I would love to hear what you guys think down below of this idea of setting up an automated recurring investment strategy. Like for example, the one we talked about in this video, buying say $5 or $10 per day of a high quality dividend growth ETF like SCHD. Are you personally more interested in handpicking your stocks and ETFs, or are you one of the more busy passive investors that really enjoy these automated strategies that most of the brokerages offer these days? Comment down below. If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this in the future. Thanks as always for stopping by, guys, and I'll see you in the next one.